as I've been saying quite a bit, I've been doing a series called A Million Little Things, and everyone thinks a switch is going to flip and bam, you're a trader, right? Well, it doesn't work that way. What will happen is you're going to have little tiny epiphanies along the way, and very little small adjustments you can make to make your trading better and better and better. And it doesn't have to be one huge thing. In fact, it's better off from a neurological standpoint if it isn't. It's much easier to make a small change. If you want to make a big change in your life, make a small change. And an example I often give is we have some friends that are a little bit on the pudgy side, him more than her. As I said before, it's as you get a little older, you know, weight's not as much of a problem. What you considered heavy is not that big of a deal anymore. But I digress. Anyway, they go on their 6 or 7 fad diets a year, and each time they end up a little fatter. And that's because they go on such an extreme diet that their body just rejects it. We have a homeostasis about us that keeps us alive. Our temperature can't really go up a few degrees or down a few degrees, otherwise it would kill us. And if you try to put that big shock to your system, your body's going to fight. It thinks there's something going on. It's going to fight to stay alive, and you end up worse than you were before. But anyway, so it's better if it's a bunch of little things. Okay, so this week I stumbled across a video on YouTube, which actually dovetails into a lot of things that I've done. I found some presentations going back 10 years or so where I talked about a lot of this type of stuff. But I was very happy to find this video, and I'm going to show you the gist of it in just one second. And one of the things they talk about is inversion thinking. And inversion thinking is kind of thinking a little bit about the opposite. And I'll probably do a presentation at some point on opposite George. But you need to kind of think about things and turn them on their head a little bit, as opposed to like how great this trade could be. It's like also think about what could go wrong. The example they gave in the video was they were studying the planes that survived in World War II. And their thinking was, well, let's reinforce these areas that got shot up. And when I first watched the video, I'm like, well, hang on a second. These engines didn't get hit at all. And surely if the engines got hit, that could take out an engine and take the plane down. And a guy by the name of Andrew Wald came along, and he basically pointed out that you're using a survivalship bias, okay, a survivor bias. And I'll give you an example. I recently came up with an IPO pattern, just kind of noodling around to kind of bottom fish a little bit in IPOs. And I think there might be something there. I shared it with my Facebook group. But the one thing I pointed out was I'm looking at a database that the survivors of survivors. Okay, I'm looking at a database of survivors. I'm not looking at a database of the ones that didn't work. Okay, the ones that worked were because these stocks are still in business, and there's probably an edge there. Unfortunately, though, you don't know how many stocks are going to go out of business and how many times that pattern would have triggered. So you would need what they call a survivor database, I think, where you would have those old stocks in it. But anyway, getting back to this, Mr. Wall pointed out that where the bullet holes weren't as relative or relevant, I should say, as just the opposite. You need to look at the planes that went down and what took those planes down. And he pointed out, obviously, the engines and the tail section would be a vulnerable place to get hit. And one thing I totally overlooked when I was looking at this was, what about the cockpit? And notice in this case here, there's no holes in the cockpit. So obviously you take the pilots out, then the plane's likely going down, right? Or will go down. So sometimes you have to use this inverted thinking. And again, around the ailerons, I guess over here, whatever, been spots where would likely take the plane down. Now, everyone reminds you of projects. You know, you have a new project, there's a wild enthusiasm phase. Everyone's enthusiastic going into the trade, and then once you get into a trade, it's like you begin to become a little nervous and pessimistic unless everything's going swimmingly, obviously. And in reality, these two things need to be flipped. You need to kind of think along the terms of what could go wrong and how can I pick a stock that would fail? What would make this go wrong, as opposed to getting all excited. And then if things work out, obviously, then you could be excited. Now, a few weeks ago, I kind of introduced the concept of toward thinking and away thinking. And I'm a big fan of Clarkson's forum. I'm a big fan of Jeremy Clarkson. He's a hoot. He's a trip. And he has, at least in this particular program, he tends to have this toward thinking, like I'm going to just get some pigs. And Charlie's like, well, where are you going to keep them? And he's like, I'm going to keep them in the woods. It's like, they're going to eat all your trees. He's like, nah, they'll be fine. It's like, I'm going to get some sheep. And he's talking to the rancher or whatever he's buying sheep from. And he's like, rancher's like, well, how are you going to keep them in? He goes, oh, I got a wall. He goes, well, they'll jump a wall. So you need the toward thinking, but you also need the away thinking too. Both are crucial. And one of the later episodes, it's like Jeremy's all excited about his menu at his restaurant, and then Cheerful Charlie, as he's called, sarcastically says, well, where are your prices? He tends to see the wrong in things as opposed to seeing the good. And you really need both in farming and in life, and in restaurants too, I suppose. Now, back in 2017, I actually did a whole presentation on this. And there's actually a reason you feel this way with trades from a neurological standpoint. And there's without getting into the whole presentation, you can go in and watch it on my YouTube channel. But you have two different parts of your mind working, and that comes from Brett Steenbarger talks about that. So this is kind of a neurological thing. So in reality, kind of piggybacking on this thinking, you actually have to use that inverted thinking, like what could go wrong with this trade? And another way of doing it is like, okay, well, how is this trade crappy as opposed to how is this trade fantastic? Now, in the video, he talked about how these Stoics, such as Seneca and Marcus Aurelius, would think in terms of what could go wrong, what's the worst could happen. My father, God rest his soul, whenever I'd call him years ago, with the problem or situation, he would say, what's the worst could happen, and then improve on that. It's almost like you need to embrace that worst thing and figure out how you would deal with it. And the beautiful thing is, usually it doesn't turn out to be the worst thing, but if it does, you can deal with it. My wife calls me hobby boy. This is a dining room table I've been building for about a year, and I'm at that 2 weeks phase, every time she asks me, how long? 2 weeks. But I tend to be a hobby boy, as she calls me, and I found this tree out in the woods that had fell probably around Ida time, when Hurricane Ida came through. Big old huge tree, as you can see here. Some of these are 20 something inches around. And I remember while I'm out there looking at this thing, and it was still propped up, and I had to drop it further. So I'm out there with a chainsaw, and I actually found myself thinking, what would be the best way to kill myself doing this? And it's like, okay, well, I need to get, underneath it and cut above, or I need to get someplace where if this thing goes one way or the other, I need to make sure I'm right there so I get killed, And I know it sounds a little quirky, but it's like, okay, where could I be to not get killed once you kind of think along those lines? And I'm kind of a mess in the garage, and I think I cropped out most of the mess in here, but there's plenty of mess to go around. People that have clean garages don't build anything. If you build stuff in a clean garage, then you have too much time on your hands because you could be building. But I'm always knocking a drink over or knocking over small parts and things like that. And recently, without even seeing this video about inversion thinking, I started thinking, okay, where can I put my drink to guarantee that I spill it? It's like, okay, I'm working right here, I'm sanding or whatever. Let me put it right next to me, okay? Or maybe I'll put it up on top of this drill press because everything's a horizontal surface, right? And as soon as I bump that drill press, my drink's going to fall to the ground and whatever. Small parts, same kind of way. It's like, where can I put this little box of small parts so I can ensure that I knock it over? And I did knock over some shit last weekend, but not as much as I normally would. Okay. And then, along the lines of safety. Okay. So, like I said, I cut this tree down, I hauled it out of the woods under super high tension. Like, okay, where can I stand and ensure that the cable pops? It comes flying at me, Again, where could I stand with the chainsaw to make sure the tree falls on me? When I'm using a saw, what would be the best way to cut my fingers off? Okay. It's like maybe use a clamp instead of putting my hand there, or maybe use a push stick or whatever. And you kind of need to think along these lines. And I also, when I built another table, a coffee table, and I welded that. So it's like when I go to weld, it's like, okay, well, how do I get a sunburn? Okay, don't wear long sleeves. And how do I ruin my eyes? Make sure you got your welding mask ready to go. You got everything going. It's so on and so forth. So you need to, it's negative thinking, this inversion thinking, but you have to think along those lines, and you can't always be an optimist. Now, the Stoics talk about the as I mentioned a second ago, what they call the premeditation of evils. It's like, what would almost guarantee a failure? So putting that to trading is, well, how do I guarantee this trade doesn't work? Well, I'm going to take a mediocre setup, okay? I'm not going to plan it. I'm going to have a lack of focus, okay? I'm going to forget to take setups. I'm not going to have a little piece of paper, or even better, an alarm, or even better, maybe an order in place so I catch that order. So I want to make sure I don't do any of that. And I want to make sure I'm not going to follow the plan and make sure I do micromanage the trade. So you kind of get the idea. I mean, as I was thinking about these, there's probably 200 or 300 more. Now, Charlie Munger was mentioned, and I have his book. I think I picked it back up. It's about that big. Not that I'm a value investor or anything close to it, but he does have a lot of good knowledge about life and such. So anyway, I thumbed through the book, and then I found this. The Munger system of avoiding dumb stuff will alone, strictly adhered to, allow you to prevail over your betters, no matter how smart they are. So his whole point was, the first thing you need to do is don't do dumb stuff, okay? And that in and of itself will really help you out. And who was it? William Eckert talked about intelligence in trading. And a lot of very intelligent people aren't good traders, and a lot of average at best people are, okay? And because the smart and intelligent try to outsmart the market or try to figure everything out, and then the average, as a general statement, tend to say, well, what could go wrong, and how would I deal with that, and to have a lot more of this adverse thinking. So the Munger system, avoiding dumb stuff, is important. I think it's called Poor Charlie's Almanac. And again, it's about that. It's huge. A lot of good little things in there, though. And in that particular book, he said, always invert Jacobi. I think Jacobi was the inventor of algebra, and he would look at a problem kind of like backwards, like how do you get here, and then work backwards. And that's a good thing to do. How do you fail at that trade and work backwards? And many times I've often said, you know what you're doing wrong, you know what you're doing wrong. Well, a lot of times you raise your hand, and I'm raising both of mine. How many times have you taken a trade and it fails miserably, and as soon as you get stopped out, you go, I knew I shouldn't have taken that trade. Okay, so you knew ahead of time you shouldn't have taken it. Okay, so that's kind of where that inversion thinking comes in. It's like, think about the worst thing, and how do you make that crappy trade? How do you make that trade not work? Just trading from the seat of the pants without a plan, and so on and so forth. And we're all guilty, and I know I'm guilty too, quite often. But anyway, invert always invert, Jacoby said. He knew that it is in the nature of things that many hard problems are best solved when they are addressed backward. Now, another thing that he mentioned was failure pre-mortem. And this is something that I was kind of glad to see, because this is something that I talk about often. When you get into a trade, I often talk about the F yeah test. Okay, so the F yeah test is you got to feel like F yeah, this setup looks fantastic. But the flip side of that is, okay, that's your toward thinking, and that's a good thing. Okay, I was going to be a pessimist, but I figured it wouldn't work out. Said Mr. Right. Okay, but you also need that away thinking. What if it failed miserably? And if you could say, so what? And that's why I often talk about, done complete presentations just on this, but time traveling to the future. Okay, how's future Dave going to react? And if you could say, I will shrug my shoulders, as opposed to saying, I knew I should have taken that trade, then you're going to do just fine. So you want to think about the trade from a perspective of, what if it fails miserably? Okay. And then also inversion thinking, how could you take a trade that would fail miserably? There's, it's like there's more than one story of this, but I actually know one, because I was telling Larry McMillan about it, and he's like, he named somebody else that had a very similar story. My broker from way back in the day, he had a futures trader that was a very wealthy, I think I'm guessing, just making some assumptions here, but I'm assuming that he had some family money, because he seemed to have unlimited flow of money coming in. And he was the absolute worst trader of all times. I would say 95%, maybe even more of his trades failed. And I asked the brokers, like, why did I take the opposite of everything he does? And he said, well, there would be a bit of an ethical situation there. And then the joke I've heard before about similar stories is that, what do you do when your client runs out of money? Do you give him more money to trade so you can continue to do the opposite? I have a neighbor that bets a lot, and I just don't have the energy to do it. And I asked somebody else to place opposite bets on him once, and it didn't happen. But I don't have the energy, but I think that you could probably be very successful just doing the opposite of what he does.